Welcome, ladies and gentlemen, to Swiss Resource Capital virtual roadshow session today with Condor Gold, and Mike Child, the chairman and CEO, is here with us. Mike, hi, actually to Switzerland, because you're in Switzerland today. How are you?
Yes, I'm very well, thank you. Delighted to be here.
Yeah, perfect. Thanks for taking the time. And we have over 50 people registered, so let it take some time that everybody can check in here. Yeah, first of all, as said, very warm welcome also from my side. My name is Jochen Steiger. I am the founder and CEO of Swiss Resource Capital AG from Herisau, and also Rohstoff-TV and Commodity TV. And let me do some remarks here for disclaimer reasons. We fully comply to the European, Great Britain, and Swiss data security law, so nobody can see each other, no names or emails. We will have a presentation of approximately 20 to 25 minutes from Mark, and afterwards I look forward to a very lively Q&A. And please post your questions inside the chat function or the Q&A only function. You see it on the right side on the bar, so you can type in any time and I will moderate this after Mark's presentation. And so that looks good. People are still checking in. That is fantastic. Sorry, that was my fault. Okie dokie. Let me bring up the presentation now. Yeah, let's get started. Mike, I would say the floor is yours.
Thank you, and thank you again for that introduction, Jochen. Condor Gold, firstly, I'm chairman and CEO of the company. I've been with the company for 10 years full-time. I've done nothing else but develop this from no ounces in the ground to 2.4 million ounces, and a fully permitted project that's actually bought all the land and about to complete a bankable feasibility study, and we've purchased the mill, bought the mill into the country as well. This photo is taken at the entrance to the mine. It's 700 meters long road. It demonstrates that we can build roads. We've engineered this ourselves with our architects and civil engineers. And it goes for 700 meters around the processing plant location. Here's our statutory disclaimer. A copy of this presentation will be on our websites in Canada and in London. So this is really just the investment highlights. Our point one is that our base case, we're targeting 100,000 ounces of gold per annum from the beginning. And we have an upside case of 150,000 ounces of gold per annum. We're due to have a feasibility study to 43-101 Canadian standards, or some people call it a bankable feasibility study, by the 31st of March this year. We can materially expand that production to the 150,000 ounces by bringing in the underground. And point two just highlights the 3 open pits that we've got fully permitted. When I say fully permitted, it's for extraction and construction. We'll do it in 2 stages, as I've mentioned. We've got strong economics. We're expecting about 900 all-in sustaining cash costs, and the upfront capital costs to be about 125 million, including contingencies and EPCM. We're fairly undervalued. On today's share price, we're about $26 an ounce in the ground, and that's just basically the market capitalization divided by the indicated and inferred ounces, and we're 0.14 price to book value, compared with the PEAs that we put out last year and filed on CEDAR only 2 months ago in November. Nicaragua. Nicaragua, from a mining jurisdiction, is an incredibly good address to be in at the moment. The government is permitting everything. Gold is the biggest export of the country. Last year, you get the concessions for 25 years, both exploration and exploitation. There are tax-deductible items on the importation of capital goods, so that's mining friendly. We should know we've just imported a mill with skilled labor amongst the 4 commercial mines. A company called Mako Mining built a mine and poured first gold last year. So it's a great address. There's no free carried interest. We have 100%, unlike most places in Africa. There's great infrastructure in terms of ports and highways, and there's grid power through our project as well. I should also say, last time I was in Nicaragua, which was in December last year, I'm able to go directly in and see the Minister of Energy and Mines, who, when he sits down with me, says, I want you to know this government supports the mine, this ministry supports the mine, and I, the minister, support the mine. So you're getting that one-on-one meetings at the most senior level to see this, get this permitted and go through construction. The project, we are what's called a low sulfidation epithermal vein system. It's a former producing mine. It produced 500,000 ounces of gold before the mine closed in 1956. There's a total of 2.3 million ounces there, which is verified by SRK Consulting. There's about 80,000 meters of drilling on the project. We've got the key permits I mentioned to construct and operate the mine. And here are the 8 different deposits that make up that 2.3 million ounces. And there's a little bit of silver as well. All these areas can be expanded by further drilling. This is the permitted zone. So we've permitted 3 pits. It does take time to get permitted mining, as you all know. In America, it's taking about 5 years to get something permitted now, and the similar sort of time in Canada. So we have permitted everything in purple outline is from the Ministry of Environment. So we have the master permits to construct and operate the mine. And the big pit of Landia, open pit, is here. This is 1.2 kilometers long. These are 1,000 meter, 1 kilometer grid. The processing plant is permitted for construction. The tailings storage facility, if you can see my mouse, is permitted. The powder magazine. The whole distance from the pit to the processing plant is just over a kilometer, but the plant is centrally located between the 3 pits. Interestingly, we have another 1 million ounces of gold underneath the pits, which is not permitted, but to my mind, that's a foregone conclusion. If they're going to permit an open pit, they'll permit the underground as well. Here is the site clearance. So we bought all the land for the processing plant and the pits. The grey, I took this with an iPhone from where the jaw crusher is going to be. So everything around the processing plant is now cleared. In case you're worried about deforestation, we have a nursery of 7,000 trees. Under the law, we have to plant 10 trees for every 1 tree we cut down. And we're doing several times that. We're committing to over 200,000 trees reforestation with the ministry. That's all agreed and in writing. So that'll be great for the environment. This is the PEA, which we announced in a press release in end of September last year and filed on CEDAR. There's a several hundred-page document which you can download off CEDAR. It fundamentally gives you 2 production scenarios. The bigger production scenario is this scenario, which I'll just talk through, is 4,000 tons a day or 1.4 million tons crushed per annum. And this is the maximum we can do on what we know today of independently verified ounces. This gives an IRR of 54% at $1,700 gold, an NPV post-tax, of course, deducting upfront capital costs. That's a proper NPV of 418 million. Discount rate 5% is standard. We have to use it for regulatory reasons in Canada. I mentioned we're dual listed on Canada and London. And that's the NPV. The average annual production would be 150,000 ounces for 9 years, roughly 1.5 million ounces produced. Initial capital is quite small in mining, terms of 160 million. And the payback period is super quick. It's only 12 months. All-in sustaining cash costs of $958 an ounce. And at the bottom, you can see the fully diluted mill feed. These numbers are done by SRK Consulting in Cardiff and Denver. Now, as I said, that's where we want to be at 150,000 ounces. So that's what the project could do. We're going to start in a 2-stage approach to minimize our upfront capital costs and have a quick payback. And then we'll fund the underground development out of cash flow. So I just want to be clear. We're doing 2-stage, 100,000 is our base case. This is a cross-section of the main pit we're taking in the FS, and some of these grades are fantastic. We've got 10 meters at 34 grams, and even the 5th biggest drill result, best one, is 21 meters at 6.5 grams, but that's really near surface. And there's over 80 kilometers or 80,000 meters of drilling on this project now. This is drilling we did last year, which some of you will recognize the slide. What we wanted to do, the next few slides show that why this can be such an attractive project for ourselves, and this comes down to how do we high grade it to get a quick payback on our capital. So we did 25-meter drill spacing here. We did over 55, 60 drill holes, and this effectively showed there's 445,000 tons of over 4 grams open pit within 35 meters of the surface. So gold's right there on the surface, and that can give you, at 1,700, can give you $60 million of operating profit. So that can be done in 6 months, and it's right there on the surface. Look at this drill intercept. We released 21 meters true width. I'm not giving you a drill hole intercept. I'm giving you the true width at 6.5 grams, including 15 meters at 8 grams. This is super high grade, and it's sitting there 24 meters drill depth, which is 20 meters beneath the surface, and it goes to surface. And similarly, we're trying to show you here a high grade quick payback scenario. We infill drilled 8,000 meters on a smaller pit we've got. This has only got 120,000 ounces in, not 900, but it was 70% the lower category. So we infill drilled. We still got about 4,000 meters drill results coming back, but it shows that 80,000 meters can be produced super high grade again, over 5 grams open pit, $90 million of operating profit. And this pit's only 100 meters deep, which is nothing in mining terms. And these are some of the drill results we announced last year. So this is the high grade scenario from the 3 pits. Remember, we got 1.1 million ounces. There's like 9 million tons within the pits. And we're saying, well, if we want to pay back the debt to the Swiss investors or the banks or the gold loans, then they're going to get it back quickly, because look at this, 1.6 million tons at 4.6 grams. Many find that quite attractive to see, and it does not include low-grade stockpiling. I've taken a 4-gram conservative head grade for the mill we purchased, which is 2,000, and that'll give you about 100,000 ounces. That's how I get to my 100,000. The feasibility study, we've been working on this now for over a year. Feasibility study has cost $6-7 million. It's just expensive. This is being done to the same standards as if a mine was going up in Australia, Switzerland, or Canada, but you're probably more likely to find it the first two. All these studies are now completed on the ground: the geotechnical drilling, the site-wide water balance, the hydrological drilling, the process plant is designed, the MET results are there. We're now just into the final results coming through and an analysis of those results, and then report writing. On the PEA I gave you, we had open pit mill feed of 8 million tons at 2.56, so a million ton per annum mill. There's one way to look at that is that could be 8 years, or you can mine it quicker. That's just one of the pits that we're doing the FS on. The mill we purchased last year, we saw an opportunity. A company called First Majestic Silver had ordered a mill, and they run into an argument, a tax dispute with the Mexican government, and they cancelled the order, but it was 90% complete, constructed. So we struck a deal with them, 6.5 million. This saves us 12 months. It's brand new. It's from Finland. It's the Mercedes, or should I say the Audi of the mill market, because more are used up here in Switzerland, I think. But we paid $3 million, almost half of that in paper, at 50p per share compared to the current share price, a nice premium. It's all arrived in Nicaragua, apart from something that First Majestic is storing us on the Pacific coast, and we just have to be 1 or 2 weeks to get that into the country. But it's all in a warehouse. I've seen it. I've been there earlier this year. It's like 6 weeks ago, looking at this arriving into the country. And then I showed this to the Minister of Energy and Mines, and they absolutely loved the fact the mill has arrived in the country, and this is the next big mine. This is the final designs to FS level. In the interest of time, I'll just speed up a bit. If you can see my mouse, the pit is to the top of the screen. We have a truck here, sorry. This is called the first crushing. It goes in to get weighed and moisture here. and sampled, and it goes to the primary crusher, and there's cyclones. I won't get too technical. The takeaway from this is it's done by Australians called Hanlon Engineering, is in Tucson, Arizona. It's owned by an Australian group called GR Engineering Services, which you can check them out. They're ASX listed. They built 30 gold mines. They know what they're doing. They were there, two of them there 2 weeks ago in the country doing the final positioning of everything. And that's the final design. And that's now 50% plus engineered. And we're meeting them next week to go through the CapEx numbers on this mill. So that's completely de-risked. The second part of our story, and I'm just going to spend 5 minutes on this, is that we think we could be on a 5 to 10 million ounce gold district. So that's an exciting part. Why do I say that? You're all familiar with the plate tectonics in this part of the world, where the Pacific plate subducts under the cocoa plate, and that goes from California, the California Gold Rush days, down to Chile. And on this image here, to the right, or I should say the east, we've got rice fields, and to the left, the west, we've got sugarcane and cattle country. And we have this buckling of the plates here. And this is this mountain range, 300 to 800 meters above sea level. And through that, we have major regional faults. Now, in gold systems, the gold comes through the fault or the crack in the surface. And what people are, the structural geologists and the top guys are looking for is very complex faulting, because the more faults around, the more gold fluids can come through. So you have major basement feeder zones down here, these two corridors, and then a linking structure here. And we've done all the preparatory work of helicopter-borne geophysics, soil geochemistry, structural geological modeling. Lots of geologists have sort of mapped this, and you can see where the gold's coming from. It gives us good faith to see there's easily another 5 million ounces on here. One way to get there is just drill down what we've got. We can get to 3 million ounces by going down the ore shoots, because we haven't had the money to drill deeper, but we have them 3D geological models, so we can see it goes that way. And this is an example. This is a long section, so looking side on at the pit, the southern end of the pit. We have 12 gram, 10 gram, 10 gram, 10 gram, almost 200 meters beneath the pit. An average width of about 8 meters. This is 16 meters, if you can see it. This is totally open here. There's probably another 200,000 ounces, and there could be a series of these ore shoots to the south. Again, with the upside, I put on here the highway fault. This is a regional fault here. So all the gold is to the north at the moment on the surface, but it continues. These faults continue south here. They'll just be underground deposits. And Cacao we drilled last year. I'm just going to show you this. So we had 60,000 ounces here over 400 meters, but it goes for 4,000 meters. So it has some alluvium, and then in the riverbeds we get rock chip samples. And the drilling that we did, here's the 60,000 meters. We drilled down, we doubled the depth. That's 14 meters true width at 4 grams. And look at this contour here. It tells you the vein over 10 meters thickness, and that's a good width for underground mining. And we doubled the length. So we kept stepping out underneath the alluvium, and we got 34 meters here. It's low grade, but we're clipping the top of the system. So the geologists will look at the core and say, this type of rock is at the top of a boiling zone, and these go down for 400 to 800 meters in this part of the world. So we think there's another 1 million ounces here, is the bottom line. Environmental and social, looking at my watch, I'm on 20 minutes.
You're fine.
Oh, I'll go back over here. We've spent a huge amount with the local community. We have 14 people in the social team. Last year, we put a drinking water project in for $250,000 US. We've run different engagement groups up here. It's an old mining town where the mine closed in 1956, and there's 40% poverty there. So we've done detailed stakeholder mapping and engagement, from the Catholic Church to the schools to the pharmacies to the doctors and medical centers, I should say. The most important thing is drinking water when you don't have it, not education or medical. It's actually drinking water. So we're supplying drinking water free to 700 plus households. And that enables us, when we give these 5-gallon drinking water things, to open the door, and we explain the mine and explain the community projects. We're also training now The budget this year for training people is about $185,000 in the local community. So when I was there in December, I was giving out prizes for, we trained 30 Caterpillar drivers. That's the most popular course because they probably want to go in. I think they can get more gold out, but we trained about 30 people who got their certificates, and they're very pleased with that. So the community is very much on board, and this will radically improve the economic growth and prospects in the community. The shareholder structure, just a quick slide on this. Jim Mellon is the biggest shareholder. He's a fellow director. And so between Jim and myself, we have about 22% of the company. There's another 20% held by sort of contacts and people that we've introduced over the years. So to summarize, our base case is 100,000 ounces of gold a year for 8 years. We're fully permitted to construct and extract from 3 open pits at the moment. We think we're on a significant gold district, which we have to unlock. We've got attractive economics of about 900 all-in sustaining cash costs. We're pretty undervalued at $26 an ounce in the ground, or a price to book on the bigger production scenario of only 0.15 price to book ratio. And the project's high grade, and hence the quick 12-month payback period and attractive economics. So thank you.
Perfect. Thank you very much. That was really fast. Wow. Super. So there is a question from a long-term shareholder, and he's very happy how you managed the development of your assets. He's asking, what were the obstacles to getting a toll deal, and can these be revisited soon?
Okay. I'll just, for the background, I'll explain for the other listeners what that question's referring to. There's a mine in the country called La Libertad mine, which is run by Calibre Mining. It's operating at 50% capacity. The total capacity, installed capacity, is 6,200 tons a day. I believe he's asking about that because, as I mentioned, with the high grade that we've got near surface, it would be quite easy for us to truck ore over to that mine. It costs about $30 a ton to move the ore over. Why is that relevant? We measure gold in grams per ton, so 1 gram $60 roughly. So if you have a 4 gram per ton rock you're taking over, that's $240 a ton. You can perfectly spend $30 on trucking costs. So we have been keen to get into early cash flow, basically, via toll milling, by taking maybe 5 or 10% of the ore that we've got over to that mill and reaching an agreement with Calibre Mining. Now, where we are on that, and it's obviously not sensible for me to negotiate in the public domain about this, but we have had conversations with Calibre Mining. We're not under a confidentiality agreement, but I want to be prudent about it. We have put forward a proposal to them, and effectively we've had conversations recently, i.e. very much at the end of last year, we're waiting to hear back. So there's not a question of are there obstacles to it. They haven't come back formally to us on a toll milling proposal. Mm-hmm. So okay. It may or may not happen. But for any contractors, everyone will appreciate it takes 2 people to reach an agreement. So
that's normal. Yeah, maybe they are very busy because they just taken over Fiore Gold.
and that, I think that's a very, very good point. And certainly the senior management would be very tied up with that, and they've just voted it through successfully. Looks like a great deal for them. And I have to say, they've done a fantastic job in Nicaragua on demonstrating their hub and spoke model, because the hub is the mill, the big mill. That's 6,000 tons a day, and El Limón is only 1,500 tons a day. So it doesn't have capacity, but they've been trucking 1,000 tons a day over last year, a longer trucking distance further away than we are. So it demonstrates, in a sense, if they can do 1,000 tons a day from El Limón, they could perfectly take 1,000 tons a day from us. Do they want to do that at the moment? That's really a question that should be posed to them as well. In the nicest sense, but we would, at Condor, we would like to reach agreement with Canada over a toll milling agreement.
Okay. Also a question here about your, let's say, staff and your team. Do you have everything together to, let's say, do you have the production team, or do you still searching, let's say, a COO or any specialized personnel?
That's a good question. We've significantly increased the team over the last 18 months. The latest person to join us was from Oceanagold, which you might know. They're based, the main in the States is the Hale Project in South Carolina. So I spoke with him yesterday, and his name's on our website, Jair Diaz. He's a long-term mine planner, so he's Peruvian with a but educated at Colorado School of Mines, and he's an expert with mine scheduling. So he's working on our mine scheduling, FS schedules and stuff. He'll be working on that now. So the answer is we have an architect, we have civil engineers. My general manager is a former mine superintendent at Elimor, the nearby mine. So we know, and he has been blasting and in charge of open pit production for 18 years. So we've got a very good team to take us through to the next level. We do, quite rightly, when construction financing comes in, we need to build that team up again and look at what do we need to do the construction. Now, the construction will typically be done on an EPC or an EPCM contract, meaning it's engineering, someone else does the engineering, procurement, construction, and maybe the management, maybe you manage yourself. But that's a major de-risk. So you don't want to build one of these mines if you haven't done it before. So you appoint somebody else and they'll charge you 10 to 15% of the construction costs, and Hanlon Engineering, who've just visited site and have designed everything, have built 25 of these mills. They're building one in Papua New Guinea at the moment. They can perfectly build one. They've built them in Mexico. They can perfectly put one up in Nicaragua. But we'll keep that door open for competitive tension with other people to do EPCM. We do need to hire a COO. So the person's quite correct. We would like to hire somebody, and we will do that in the first half of this year, I hope, so that the market can say, that guy's built a gold mine before, he knows what he's doing, and we have that person. So we have to beef that up.
Yeah, super. So what is the current cash status? When do you need next financing? Or let's say also, when do you start to proceed with the project finance for the mine building? Because you have a mill already, right?
Yes, we do. We raised 4.1 million sterling in October last year. That sees us through to get the FS out, the bankable feasibility study out. That was what we said we'd do at the time. And once we have that out, we'll then be in a position to, and we're already having conversations ahead of it, to see who is interested in providing the debt or the gold loan, in whatever capacity that debt might be. We're already having those conversations with people. So we do need to line the construction financing up this year, preferably sooner rather than later. But we do need to have the FS numbers, because the FS will do a capex of plus or minus 15%. That's what the FS does, and OPEX. So that's a number that someone will be able to say, right. And we're happy to sign CAs now with people and say, look, pretty much all the studies are done. We're just report writing, and this is what it's starting to look like. So that's that, and I think it'll be a great sign if we can announce that we have the construction finance, even if the debt only in place. That'll be positive.
Absolutely. And you said you have the mill warehouse, so you can start any day.
Well, we can with that. We need to get the rest of the equipment. So we have a list of all the equipment we need already. But we still have to buy other parts, like the jaw crusher. Now, for 43-101 capex, if I say something, it has to be brand new. So for the listeners, when you put these numbers out, you can only file it on 43-101 and Canadian regulations if it's a new jaw crusher. Let's say that costs $1 million. We might say, well, we don't want a new one. We can perfectly buy one for a third of that price, second hand, and have it come in from Mexico. So there are ways in which some of the capex numbers can come down, and we're going to run through that exercise. What's it new, and and we get quotes in. That's what Hanlon they've got quotes in for all of that. And the other thing on these things is that when the independent consultants they said, oh, right, you need cement, for example. I'll just give you an example.
Yeah.
We have volumes of cement needed for foundations, for all the different culverts, river diversions, dams. And they might say, right, that's going to cost you X. And you say, how did you get to that number? Oh, we benchmarked it. And you say, you realize in Nicaragua there are quarries, they have Holcim and Cemex working there. You don't have to import cement. Oh, okay, so we can knock 35% of that cost of the cement off. And that's what we've done. We've actually got bid packages, given them to the local cement companies and taken them to the project. So this is fairly permanent. If you want this work, then give us your best price now. And by the way, give it to our solicitors in the capital so that they can open under a sealed bid the prices so that there's no allegation of impropriety.
Okay. Do you have options and warrants outstanding, and do you plan maybe to do a second listing in the US?
Definitely not doing a second listing in the US. 2 is enough of a headache. To be regulated on the OSC, the TSX by the OSC and in London, that's enough for me. Thank you. Yeah. So we won't get a US listing. Do we have options? The details are on our websites in London. So we would have over 10% or so in options. They're all, apart from one, I think, out of the money. We do have an employee options scheme, and the remuneration committee, not me, and I'm not on that, decide on the grant every year for options. In terms of warrants, there are warrants outstanding, and most of the placements, because we're Canadian and we have a lead person typically coming in, the recent placements have come with a warrant attached. So the details, forgive me for not giving them all out, but
no, it's all on the website. Right. Okay, super. Then 2 questions to your major shareholders. First of all, Jim Mellon has 19%. What might be his exit strategy? Meaning, will he stick with the company, of course, to bring it into production, or could he also imagine? I know you cannot speak for him personally, but just in general, is he, let's say, fully aligned, which I would expect for the production, or can you also imagine if the price is right, you got to sell? And also, can you give us more information on your Nicaraguan shareholder and the political situation there?
Okay, there's a few questions there.
Yep.
You're right. I can't speak for Jim Mellon, but he's a wealthy man. He's worth over $1 billion. He's got a material shareholding in Condor, but he does have other interests. Jim ultimately is a financial investor, so I don't think his idea is like, say, a Canadian mining entrepreneur who might say, I'm going to take Condor and I'm going to roll it up and I'm going to have a 500,000, 1 million ounce producer in 3 years and beat my chest and be a 1 million ounce producer. I think Jim is more likely to say, when the timing is right, I want an exit, but I want to make 3, 4, 5, 10 times my money. And the timing on that, I can't tell you that. That's only for him. I think there's no chance at the moment. The share price is so undervalued. It's really more of a question of how do you unlock that value. Will he be supportive? He's supported every placement for the last 7 or 8 years. And the last one put £1 million in, and the placement before that put £2 million in. So he's been a very supportive shareholder. The second question, Nicaraguan Milling Company, they have a 6-7% shareholding. The driving person behind that is an American mining engineer called Randy Martin. We announced that at the time. He's built 5 mines around Central America. He built the mine on the Caribbean coast, which is now owned by it's Hemco, the Bonanza mine. And actually, Caliber's mine, he originally owned that one about 15, 20 years ago. The La Libertad mine, he built that. So he's a mine builder. He's an operator. He's 65. I met him my last trip out there, and he's a supportive shareholder. The Nicaraguan political situation, this does us unfortunately no favors, in the sense that Nicaragua does attract negative press. And the reason for that has been the fact that President Ortega stood and was re-elected for a 4th term, and his inauguration was on the 11th of January this year. So we have a presidency where there have been allegations of a lack of free and fair elections. And on the last elections, international election monitors were not permitted into the country. And of course, that goes down very badly if you're a journalist anywhere in the world. And our job, however, is to get on and develop and construct this, and we don't get involved in politics. We want to stay neatly on the fence. You might expect me to say. What I can tell you is, from a business perspective, they are incredibly supportive so far, and I hope that continues. Getting to see the minister, and I quoted the minister earlier, and he then says, what problems have you got? How can we help? Now, in some ways, that's very good for mining. They're permitting everything. It's better than having sometimes lurching the other way and having someone who's suddenly anti-mining, which we've seen in Peru recently, with 2 mines closed down for some of the big producers there. So in some ways, it's a continuation. The re-election for us, anyway, is a continuation of a very pro-mining policy. And they realise that that's the main thrust of economic growth. Unfortunately, I suspect we continue to have negative press in terms of freedom of the press, in terms of democracy and so forth. And there have, as people know, been sanctions on Nicaragua. This is mainly targeted individuals, but no doubt that negative press leads for us to have a weakish share price. It's partly the reason. This is not dissimilar to many parts of the world. And you can just look at Africa. You've had Burkina Faso coup d'etat. You've got Guinea coup d'etat in the last 6 months, and you've had a military junta in Mali with ECOWAS, the nation of states, putting sanctions all over Mali. So this does happen in our sector.
Yeah, but then they still need the mines because they need at least some jobs and taxes, right?
Correct.
Okay, let's talk a bit more about ESG. You touched already on that. You want to plant altogether 200,000 trees. You are looking for clean water. You are taking care of your communities. This is all highly appreciated because I think this is really sustainable mining, and this is how mining should be done. That is fantastic. Do you face any problems, let's say, with natives? And also you said you are training already a lot of staff. So can you train all the staff or bring that together until you go in production? Is that all possible?
Yes. The staff at the moment are all Nicaraguan. All the social team is Nicaraguan, the 14 people. I've deliberately focused on Nicaraguan staff. I found that actually getting Peruvian expat social specialists, paying them several times more and putting them in Nicaragua doesn't work, because the Nicaraguans look at the Peruvians and say, what are you trying to do, telling us how to do our social engagement? On the indigenous community, so we'll grow it, particularly on the social side and environmental, we'll grow that locally. We'll bring in another environmental specialist for compliance with Equator Principles. Our head of environment at the moment worked with the ministry for 9 years. So everything to do with tree cutting permits, extension of permits and so on. She's brilliant. I've been very, very good at that. Indigenous communities, we had the IFC as a stakeholder in the company at one stage. There are no indigenous communities in the strict legal definition of, is this an indigenous tribe? There are some in Nicaragua, but they're over on the Caribbean coast and we're near the Pacific coast. So we don't have a problem with indigenous communities.
Okay, so let's go to the permitting, as you touched already on that. You have 3 pits permitted, yes. Meaning you are like, ready to rock, I would say. You need the money, and then let's construct the thing. How does it work then in the future if you want to up more open pits, and also when you want to go underground? Do you have to, let's say, re-permit parts of that? Do you have to do a special underground permit in addition, or are you now clean and clear to really move forward?
You're correct. We got 1.1 million ounces open pits, 3 pits permitted, and that's enough with our mill, the mill feed. That's enough for 7 years. We just did that. We didn't do anything else. But if we want to make it, we got another pit. We actually got another 2 pits. We got 5 pits in total. If we were to permit a new area, we would have to submit what's called an ESIA, an environmental social impact assessment, applying for an environmental permit to extract from that pit. Now, you'll probably find that 60% of that work's done, because we're going to be putting that new pit, if you like, through an existing permitted processing plant. So you're bolting on. So you haven't. What we've done is we've permitted the plant, the tailings, the water, the management systems, and so we have a lot of data. So doing a small pit, say we have another one. We have one 1 kilometer away and one 3 kilometers away, or 4 kilometers away. When we want to make those bigger before we permit them, firstly, but it would be a relatively simple, but we have to go through the same process. And we have to have another public hearing with whichever community is near or impacted by that pit. But essentially, you're saying to the government, you've already permitted a mill, you've already permitted 3 pits, that's doing 100,000. Do you want more taxes? Because the government has got 3% royalty off the top and gets 30% corporation tax, and we're going to. Do you want the mine to continue longer? So we are employing several hundred people, and at the end of the day, the government is going to permit it underground. We'd have to permit underground. Yes, it's an additional permit if we permit that million, or when we permit that million underground. We can't just. And part of that is to do with health and safety. Underground does impact on water, subsurface water management and so on. So there is additional permitting for underground, but the plant will already be permitted. If we wanted to double the capacity of the plant, yes, we'd have to go to them and say, by the way, we want to make this bigger. Do you want more taxes and so on? Structure. And the answer, by and large, that's it. The difficult thing is getting the base case. There's quite a big base case, 100,000 ounces. Is getting that permitted.
Okay, but you, if I get you correct, let's say you are producing for 7, 8, 9 years. In between, you can do the permitting of additional pits, so you're not losing any time, and then you can move also forward. Correct?
That's correct. And we might, for example, our plan at the moment is if we start with, say, the mill we've got is 7.3 meters or 24-foot diameter. It's a big mill. Now, we get that up and running the first year or two. We might simultaneously, with the cash flow, drill out the underground, do all the underground mine designs, and we say, actually, from underground, we can put another 1,000 tons a day. So we add a ball mill on. So we'd have to permit an extension of the existing capacity because we're permitted up to 8,000. We're permitted up to 2,800 tons every day, and if we want to increase that 50%, we'd have to do all the designs and say to the government, can we expand this? And they'd be most interested on where we're putting the waste. Tailing storage facilities are sensitive and everywhere in the world, and we would want to do that right, and that quite rightly would need permitting. It should be, touch wood, straightforward. And there are examples of existing mines increasing capacity, or extending the life of mine, or bringing the underground in. In an interview on Calibre Mining, the CEO recently said when they start a permit to get the permit, it's 12 months. That would be a guidance. If we found a new discovery, or we wanted to say cacao became 500,000 ounces, and it's 5 kilometers away, how long does it take to permit that? Probably a year.
Okay, super. We saw in your presentation that you have several, I would call it super high grade results, which are very shallow, which are easy to make really money. If I'm correct, I think altogether was like $150 million. Let's call it easy profit, if you want to say like this. Do you think with more exploration that you can get more of this super high grade? And also, if we look at La Mestiza, for example, you have only 100 meters depth so far. So do you plan to go also much, much deeper there? Because I could imagine to go deeper would maybe give you more gold.
It's a very good point. In fact, the Mestiza vein set of open pit and underground is about 334,000 ounces. It's actually a vein swarm on the top of it, on a plateau raised up about 500 meters. So there are several parallel veins. We've mapped them, we've trenched them, we know where they are, we haven't drilled them. The Russians, the former Soviet Union, going back now 30 plus years, actually drilled 12,000 meters on a Russian, if you like, Soviet drilling on Mestiza. And it has some very good scientists. They felt that area had 700,000 ounces. So they thought it was more than double what we currently got. And part of that was actually going down deep. Jochen, it's funny. So yes, their projections were that this could easily double to depth with a mineral resource. So So we think Mestiza is one of the slides I had is how do we add ounces in the known areas, because that's low-hanging fruit. We just have to step down drilling, and if it's 200 meters depth now, does it go to 400? Well, probably does, but we've got to drill it. Anything much deeper will be underground on Mestiza.
Okay. Hang on. There was a question. How much of the land do you have is left to buy? Do you have bought now 100% of the land you need?
The best way I can answer that is to say that we've been operating for 18 months as if we own 100% of the land. There are a few bits of land that we don't have. We know there are about 4 pieces. We know exactly who the people are. Our social team regularly meet with them. We know their prices. We could buy all that tomorrow if we want. We just want people to be realistic on prices, and we don't need it today. So we don't need it now. I'm not extracting tomorrow. I've got to do my feasibility study. I've got to raise the construction finance. So it's not in our interest to overpay for this. Now, the ministry, one of the ministers said to me, "Any got any challenges?" I said, "Yes. There's a couple of SOBs on the land who are wanting too much." And so, as in most countries, certainly in the UK, you get to a compulsory purchase order for land. So when 97% of the people have said yes, and this is the average price, the court forces the remainder to take the same price. I don't know if that's the case in Switzerland, but and they have that law in Nicaragua as well. So I'm not at all worried about that little bit we don't have. It's a complete non-issue. There are a few retail investors who worry about it, but they really shouldn't. I'm not.
Okay. Then a question to the power supply. You said there is a grid going by your project.
Yes.
Can you fully rely on the grid, or are you also, let's say, planning? Oops. Okay.
No, I'm okay. I'm just.
Yes. Yeah.
Sitting in the dark again.
Yeah. Okay. So can you fully rely on?
I heard that. I heard the question.
Yes, I have also an additional thing on that. Or do you also planning, in addition, let's say, to use solar power because you are in a beautiful sunny area?
Well, in Nicaragua, about 80% of the grid power is renewable energies. Geothermal, solar, wind is big, and hydroelectric. The government has just commissioning an LNG plant in Nicaragua, 350 megawatts. The company is called New Fortress Energy. It's NASDAQ listed. It's on the Pacific coast, and what they're doing is they're bringing down LNG from the Pacific coast, from the States. It doesn't all have to be supplied by the States, but at the moment it's coming from the States. It's coming off a big mothership onto smaller ships, and then you have LNG stations at this major 350 megawatt LNG plant. Now, we've met them. In fact, my last trip, I met them. There's 2 ways LNG can work for us. One, we do a deal. So in Nicaragua, as a wholesale buyer of 5-6 megawatts, I can go to them and do a deal, and we have a transmission cost over the grid. We spoke with the Ministry of Energy and Mines. So our ministry is the Ministry of Energy and Mines. So the minister, Salvador Mansell, actually knows far more about energy. He's an expert in that than mining. He's rolled out from 50% of the country having electricity to 99% having electricity almost. So yes, we can buy wholesale potentially. That could be a great win for us to get our power costs down. The other way to do it is to have LNG containers going on the back of a lorry from the port up to Minalandia, and then you just replace them. Now, that's 2 ways of doing it. So they gave me a presentation. We're very, very interested in that. We're trying to get some quotes to see whether we can put that in our feasibility study. Actually, it's one of the things we're working on right now. It's a very good question. So in Nicaragua, near the free trade zone, where you have cheap land, cheap labor, textile exports up to the States and elsewhere, there's a Chinese company that's reached an agreement for 12 megawatts of power of LNG. And that's that gets supplied to them via containers on the back of a lorry, basically. And so would we do that? That would be fantastic. We could be completely green energy, or pretty much. LNG's footprint is significantly less than bunker diesel. And that could reduce our power costs. So is the grid reliable? Any mine, not just in Nicaragua, you'd want backup generators anyway. So you always want, in case the grid goes down or there's a power outage, which we see in developed countries, let alone Nicaragua. So that's within our existing capex numbers, actually, backup generators for the mine. And but we can either take grid power or we can take LNG power, and we would have a backup as a generator for in case the grid there's a power outage.
Yeah. Do you see, let's say, the ongoing inflation, not only discussion, I mean, we see the real inflation, right, for goods and products and steel and so on. Do you see this as, let's say, a little bit of a problem for your upcoming feasibility study, meaning that you need maybe a higher capex, or have you already factored a lot in, or like, as you bought the mill already, so you are here clean and clear, or do you see more upcoming potential to bring down the capex cost even, and also maybe the AISC below the $900?
The reality at the moment is that we do have inflation, as everybody knows, and that goes across all the commodities, including steel. So there will be parts of things that we need to buy that are much more expensive than 12 months or 5 years ago. We're just in that environment, and we can't really escape that. So I would say that, yes, there is an inflationary cost, say, compared with our pre-feasibility study, which is 7 years ago. The cost of certain items has gone up for sure. But I'll give you another example on some. Did I give the example about cement earlier? Because we have quarries locally in Nicaragua, we had a price for our FS as an estimate from Hanlon, and they said, right, your cost is X for cement. And we said, how did you get that? They said, well, we benchmarked it on regional prices in Mexico and Peru. I said, well, hang on a moment. Nicaragua has its own quarries, and it has Cemex and Holcim there. We don't have to import cement at all. We've actually got quotes down 40%, 35, 40% for the cement. So there are some things unique to Nicaragua which are not going to be much cheaper. But generally, there is cost price inflation in some of the capex numbers which we're seeing at the moment. What we did experience in importing the mill is freight charges. We got caught with that. We had a quote from First Majestic to move everything. And when we came to do that 9 months later, those shipping costs had gone up significantly in parts. Probably hit us not far off double what our budget was. So if we thought it was, I'll give you a number, we thought it'd be $250,000 to import the mill from 7 different countries, from China, Australia, Finland, Sweden, Amsterdam, Canada, United States. The shipping costs with bottlenecks at port, apart from it took twice as long to get it in, and it cost another couple $100,000. It's not breaking, but we've done it. Yeah. It's a sunk cost, but yeah, will that come down again? Of course, when things stabilize in the world, you'll see a resumption.
Let's say we hope for it.
Hope so. But so where are we going to be on the cycle? I suppose that depends on our freight costs when we actually bring stuff in. But there will be a cost there.
Yeah, that's right. Then there came a question up here. When you have the banking feasibility study ready to go out for finance, do you think this might be the time when you might receive a bid or several bids?
Well,
we don't know.
There'll be a few people looking for that. I can't really talk about bids and what I expect to do that. I think most people could look at this project and say, how many projects are out there in the world? And I'd say there's half a dozen that are fully permitted, have a technical study in the last 2 months, which says 150,000 ounces of gold a year for 9 years, have a 12-month payback, have a $400 million plus NPV, have the mill in the country, have bought all the land effectively, and are fully permitted and don't have to give 20% away to some government, and this stacks up, and you can get your money back in 12 months. Well, there aren't many. So Condor as a project looks, for me, and I keep saying, well, why is our share price so cheap? And I really look at it and say, well, maybe, yes, how are you going to finance it? It's a good question. Where's the money coming from to construct that? There's Nicaraguan politics. Can we execute on it? Well, we've executed so far on everything that we said we'd done. It's an extremely attractive project, and we're potentially got another 5-10 million ounces there. So, could this be somebody else's additional bolt-on mine? If I'm a 500,000 ounce producer and I want another mine because I've either depleted here or I want to get bigger, does this make sense? Well, you'd imagine that the M&A department are looking at companies like ours. Are we about to get a bid? I couldn't tell you that, even if I knew. Be shocked by the takeover panel in the UK, but we don't have a bid on the table at the moment, or I'd have to announce it.
Absolutely, yeah, that's right. And it would be way too early. We don't want to lose it that cheap.
I agree. We're keeping quiet. We're not
exactly.
We want to unlock the value now and get this up to north of £1. That would be perfect in this.
That's right.
Before we even entertained any discussions.
Yeah. So when do you think you have the bankable feasibility study out? What's your feeling on the timeline?
It's the timeline at the moment. We've said that by the 31st of March, so we're another couple of months.
So it's only 2 months away. That's not bad.
Yes, not bad.
Super. Perfect. Okay, let me check again here, but it looks quite good. I think we answered all the questions. Yes. Super, we are fine, and we are exactly inside the hour. Mike, thank you very much for great presentation, also answering all the questions. Really happy to have you here on board. That was fantastic. I really see your stock way too undervalued, to be honest. And also what I should say is First Majestic accepted 50 pence a share. You get it today for 31-32 cents. So you still make a better deal than First Majestic. So you should really consider, to be honest. Great. Mike, I wish you all the best. We anyhow keep constant in contact here. Please keep us updated on everything. And hope to talk to you soon. Thanks for taking the time.
And thank you very much for the questions and hosting the interview.
Thank you. Ladies and gentlemen, that was Mike Chalty, Chairman and CEO of Condor Gold. And you heard it, this will probably be the next gold producer in Nicaragua. Things look fantastic. By 31st March latest, the bankable feasibility study will come out. That's only like 8-9 weeks from here. That is fantastic. Then we have all the real numbers on the table. And then things will really rolling. Project finance is in the progress. And I would say this stock is way too cheap. This is a real bargain with a fantastic management, great shareholders, and they really sticked into it. And I could imagine you might make some good money out of that. So please have a look into Condor Gold, consider the company. Thanks for watching us, and we all see us back next week, Tuesday, same time, same place, and then with Karora Resources. Thanks, and bye-bye from Switzerland.